Ann McCabe is with us, CEO, partner at Curo Private Wealth. Thank you, Ann, for being here. So the markets have sort of moved around. The Dow went higher, now is in negative territory. 59.63 is where we are, just 3 points less than where we were on the S&P before the announcement. What do you make so far of the 25 basis points and what the Fed may be thinking? The decision was unanimous. They said they will continue to watch everything as needed. I'm paraphrasing. Your thoughts?
Yeah, Nicole, good to see you as always. Thanks for having me back on this historic week. I don't think there was any surprise in the announcement today from the Fed. And I think especially given the election results this week, Jerome Powell did not want to surprise the markets. So it was very widely priced in, 99% probability that we would see the 25 basis point cut. And that's what we got. I think a lot of what we're seeing today, too, is just some digestion from the really strong rally that we got yesterday post-election. And I think that rally is really what we're calling a relief rally. There was so much uncertainty going into the election, and so many folks thought that it would take us days to get results. And we got results pretty quickly, at least from the president's side. We also know the makeup of Senate. I know the House is still to be determined, but there is quite a bit of a relief rally. I think it's important for investors to remember, though, that we have gone from election uncertainty into policy uncertainty now. Nothing is guaranteed. And I'm a little bit concerned about some of the really strong bets that we're seeing being placed in the markets right now.
And why? Why are you concerned about the strong bets being placed in the market? I mean, I have other questions, but I can't leave that one alone. So let's just hear a thought on that.
Sure. I get concerned anytime we see bets on what I would call quote unquote obvious trades. What happens a lot is investors think that whatever the presidential candidate was saying on the campaign trail, in this case, President-elect Trump, that those trades are almost like guaranteed winners. And so we're seeing a lot of the Trump trades in full force post the election results. But I'll give you an example of the energy sector. You would think that the energy sector would have done very well under President Trump last time around and not so great under Biden, but we saw the exact reverse of that. So under President Trump, during his first administration, the S&P 500 energy index actually declined 40%. And we saw global clean energy increase by a whopping 275%. And the absolute reverse happened under Biden. Under Biden, the energy sector has about doubled, and the clean energy sector has gone down about 50%. So much more of the results that we see in the market are macro driven. And I just get nervous anytime investors are piling in bets for trades that they think are going to be, guaranteed wins.
And, I also think as the economy is expanding, I mean, they noted that the economy is expanding, still growing, right? That there's a better balance of the labor picture and inflation picture. But there's still a lot of concern about inflation. And if you're cutting rates and there's inflation sort of looming, but they know that inflation has been going in the right direction, closer to their target, right, the 2% target. What do you think about inflation and where this fits in?
Yeah, well, it'll be really interesting to hear Jerome Powell this afternoon, because, of course, now that we know that Trump will be the next president, we know also we think that the Republicans will control the government overall. And so we have the tariff issue, and we know that tariffs are inflationary. We also know that we believe anyway that the TCJA Trump tax cuts, which were passed in 2017, are likely to be continued next year in 2025. And so there are really some concerns around inflation, and it'll be fascinating to hear how Jerome Powell talks about them. I believe that they are concerned about inflation coming back, especially with a Trump presidency. So we'll have to see what they say about that.
Yeah. And what about the balance sheet? Is that a big deal that they continue to run that off? I had a guest on today that said they should just leave it alone. I had another guest yesterday who said they should leave the treasuries but still run off the mortgage-backed securities. It is one of the Fed tools that they use. Your thoughts on that?
Yeah, I really do believe that they will be data dependent between now and the end of the year on that decision. I think we've got some economic data that we have to see between now and then. And I also think they are going to have to talk about what a Trump presidency looks like before they make those decisions.
I was also just looking at the big board at yields, 4.36. We were at 4.34 prior on the 10-year. How about the dollar? I mean, we've had a relatively, stable dollar in that 103, 104 range. Thoughts there? I mean, that has certainly firmed there.
Yeah, again, I think a lot of that has to do with the Trump administration. If you think about what he campaigned on with a strong America-centric economic policy with, tariffs on especially Chinese imports, but really tariffs across the board, I think that will continue to keep that dollar strong. So I think a lot of what we're seeing in the move in the dollar really has to do with the Trump win.
Yeah, I was just reading, I had said that they said inflation was making progress towards their 2% goal. The other side of it was, but still remains elevated, which we all know because we're all consumers and we see that. Anne McCabe, great to see you. CEO, partner, Curo and Private Wealth. Thank you, Anne.